Howdy, swings. The FOMC meeting notes had a positive effect on the market. The S&P 500 index went up slightly to around 5630. The market then mostly stayed at this level, with some minor fluctuations downward. Is this a sign that rally will continue? Let's take a look at Fullhapce daily swing market forecast to get some answers. Interestingly, both the market and VIX went up, making analysts confused. Also, oil prices decreased by about 3%. S&P 500, 5,620.85, 0.42% up. Dow Jones, 40,834.97, no change. Nasdaq, 17,918.99, 0.57% up. Russell 2000, 2,181.1, 1.37% up. Texas crude oil future, 71.89, minus 2.90% down. VIX index, 16.30, 2.64% up. Consumer discretionary, home builders and building products, semiconductors, healthcare, capital goods, staples, utilities, materials, and transports were also among the top performers. On the other hand, financials. Pharmacies faced some challenges. Stocks had a decent performance on Wednesday, and the actual market activity was a bit more positive than we thought. The stock's rise seems to have been influenced by two main factors. First, the positive earnings announcement at the end of July. Second is the expectation that monetary policy could be loosened further in the near future. Today's good FOMC minute was before weak July employment data and a negative revision from the Bureau of Labor Statistics. Recently revised payroll data suggests the economy may be weaker than previously thought. Some retailers reported strong earnings, but overall, consumers are still feeling the pinch. Home builders reported fewer orders than expected. Media doubts about a possible ceasefire in Gaza are growing. Trade tensions between the EU and China appear to be escalating, with China launching an investigation into EU dairy imports. Here we present our daily market forecast for swings. While the weekly upside potential is strong, the daily downside potential is also strong, and volatility is still not far from critical points. The market is approaching resistance near S&P 5650, which could potentially lead to more downside pressure. By our calculations, Thursday could be a day where the S&P could drop as much as 1%, as there is still a correction left in several sectors. There is a lot of uncertainty in our calculations because two indicators are telling different stories. One indicator is saying that a down day is imminent, while the other indicator is saying that there may be a few more up days first and then a down day. Nevertheless, the market is trending upward on a weekly basis. According to our calculations, it is possible that the market will have a down day sooner or later, but the longer trend is that the market is likely to eventually go up for several weeks. Some additional insights are as follows. Today, earnings reports have generally been stronger or better than expected. If the rest of the earnings reports continue to perform similarly, it may be challenging for the S&P 500, SPX, to experience a significant decline. Another factor that could be influencing positive sentiment in the stock market is the expectation that the Federal Reserve might ease its policies. The opposing scenario is that there's a possibility that the market could rise and the S&P 500 might go above 5650. The rationale of this scenario is as follows. According to recent Federal Reserve FOMC minutes, the Fed was already considering a rate cut at its last meeting. While a 0.5% rate cut is increasingly likely at the upcoming September 18th meeting, there are still several key economic indicators to watch before a rate decision. July PCE data on August 30th, the August employment report on September 6th, and the August Consumer Price Index, CPI, on September 11th. A recent survey from the Atlanta Fed showed that business inflation expectations for August fell slightly from July. Consumer spending appears to be stronger than expected. Home builders reported better than expected third-quarter results due to stronger profit margins. Iron ore prices have been rising recently due to expectations of more stimulus from the Chinese government. While the contrarian scenario is consistent with strong weekly upside potential, the problem with it is that it doesn't address the current increased risk, volatility, and downside stress. As the contrarian scenario seems very possible, traders need to heed the concerns raised in the opposing scenario. We believe that while the weekly market is rising, the daily market is showing signs of a potential pullback. While the market is very uncertain in terms of forecasting, we believe that we could soon see a day where the S&P 500 is down 1% or so, after which the market will take some pressure off and continue to rally. As such, it may be prudent for traders to remain optimistic for the time being, but to limit their greed and protect what they have through profit-taking or hedging. Optimistic traders will also be able to buy more at lower prices when the pullback comes. Viewers may be wise to consider both our main forecast and opposition scenarios to manage risk effectively. Thank you for watching. Fullhapce Intelligence, the best investment partner for swing traders.